Good morning, you're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. In the studio with me, Suyash Maheshwari. Suyash, good morning.
Good morning, Shweta.
Not a very bright morning for stock markets this morning.
Yes, Shweta, not a very bright morning at all. Indian markets, opened lower on the back of mixed trend that we are seeing playing out in the global markets. Now on Friday, we saw a sharp spike in crude prices, because the war situation has escalated in Israel. And we have also seen a sharp spike in US 10-year bond yields because of the risk-off sentiment. As a result, most Asian markets were traded mixed in the morning, and Indian markets also, as a result, opened lower. Now, Nifty has opened above the 19,700 level. It has stayed pretty much at that level since the opening trade. Sensex, on the other hand, was down about 150 points at 66,129 mark. Now, the broader markets, Shweta, were trading in the green. Nifty Mid-Cap 100 was up about 0.1% at 9:45 a.m. this morning, whereas the small cap index was up about 0.3%. Volatility also spiked by about 3% this morning, and the India VIX is currently at around 10.94 mark. Now, among sectors, Shweta, the focus will be on the banking pack. The Nifty banking index came under pressure yesterday, but we'll see a lot of action in the banking stocks and the banking pack in general, as the results come out, starting with HDFC Bank, Federal Bank, Bank of Maharashtra, and so on. So the Nifty banking index is down about 0.26% this morning, and it is currently holding that 44,150 mark. The auto pack continues to gain. Now, the auto pack was one of the outperformers in Friday's trade. It is currently trading about 0.5% higher. Other sectors that are in focus was, of course, the Nifty IT pack. We saw, three major IT companies come out with its results. Last week, as a result, the IT pack came under pressure, but this morning it is trading on a flattish note, and it's up about 0.05%. The PSU banking index, Shweta, is also trading with moderate profits. It's up about 0.8% this morning.
All right, that of course is the preview as far as markets this morning is concerned. Let's quickly get in Gaurang Shah, Senior VP, Geojit Financials, joining us on the show. Gaurang, thank you for taking time out. Good morning. What are you making of a volatility that we are seeing start of Monday morning? Does it look like the war is finally weighing in on sentiments?
Thank you, Shweta, and morning to all of you all. So I think large part of the reaction was done and dusted last week on Monday when we reacted. That was the first day since we heard about the geopolitical situation in the Middle East with respect to Israel and Hamas. I think we are virtually on the 8th or the 9th day since the time we had that situation in front of us.
Come to think of it.
Possibly we could see news-based driven reaction on our markets, but and the problem, Shweta, with these kind of situation is that you cannot possibly have any preemptive ideas. It evolves over a period of time, and every day is a news-based driven kind of a situation. If the situation has to escalate with other countries in and around Israel wanting to jump into the kind of current situation, that may lead to a lot of disruption in terms of energy supplies with respect to crude. And of course, the global economy is slowing down. As of now, I think large part of whatever we had to react, we have done and dusted. It will all depend upon how the situation evolves and what is the news flow. But the good part is that we are taking cues from the earnings of this for the second quarter of this financial year. And I think sector and stock specific moves will definitely be there.
Now, Gaurang, crude has seen a sharp spike. In fact, it crossed the $90 barrel mark over the weekend. I think this morning it was hovering around the $91 a barrel mark. Now, I was reading a report from Geojit only, which said that, a 10% rise in crude oil prices can affect the current account deficit by as much as 0.05%. So how much of an impact, first of all, what sort of an impact do you expect crude prices to have going forward? And, for India's fiscal positioning, what will be the impact of it?
So we import more than 70% of our energy requirement. And whenever you have a situation on the crude oil front, passing beyond $85, going towards 90 and beyond, I'm talking about Brent and NYMEX respectively. Our calculation as far as mathematics is concerned goes a little bit haywire because of the dependency we have on crude oil imports. Secondly, you have a weaker rupee against the dollar. Rupee is constantly weakening against the dollar, 83 and beyond to a dollar. This also adds to the pain in terms of the strain on the balance sheet, government balance sheet, and of course oil pool account deficit. The reason why I said that neighboring countries should possibly stay away, and Iran is one of the neighbors, and Iran is the second and the third largest producer of crude oil and natural gas. We have certain bilateral relationship with Iran. We have some imports from Iran as well, but local currency dominance. So we'll have to just wait and watch and hope that there is no escalation. If the escalation happens and if the global supply pipelines are going to get disrupted, definitely there's going to be a bump up in crude oil prices, which will lead to short to medium term pain for countries like India, which are largely dependent on imports. And then we'll have to gauge situation. But on the flip side, we also have some comfort in terms of imports from Russia. Let's hope that the dependency is more over there rather than rest of the world.
All right. And since Israel-Hamas war has entered 10th day, more and more countries are likely to join in the fight. Syria is involved, Iran is involved majorly. What sort of impact are you looking at on crude oil prices in India, if at all, and also on inflation? We understand there will be a substantial impact on the current account deficit, but any sort of impact that you're looking at, you're anticipating on inflation numbers?
Not immediately, Sweta, because we are maintaining a balance. And the problem at our end is that we have 5 state elections up until December 23. Next year, you have a big election. So how much of leverage does the government have in case if the crude oil prices have to bump up and if Iran has to jump in this particular situation? I think passing on any kind of fuel price hike to the end consumer, given the 5 state elections and a big election next year, I think that possibility looks to be a bare minimum. Whatever happens, I think the government will have to possibly take in some part of it, and possibly some part of it will have to be borne by the oil marketing companies. So that may lead to a higher fiscal burden on the government's balance sheet.
And an excise revenue cut, perhaps?
Yes, and possibly some amount of strain on the earnings for oil marketing companies. Because with the 5 state election and a big election next year, I don't think government will have much of a leverage to pass on the hike to the end consumer. So that will be a wait and watch situation, Shweta. I think we'll have to just live by the hour in terms of news flows and what happens to the crude oil prices.
Okay, so this is as far as immediate understanding of how long the war is going to pan out. But let's say the war prolongs. It goes into its 2nd month or 3rd month. We've seen Russia-Ukraine war continuing for a year and a half now. What happens in that case? Likelihood of it hurting Indian consumers as well, the resultant hike in oil prices?
It will be, and not only Indian consumers will get impacted by that, but world economies will also go into a little bit of slow kind of a move. And already we have high inflation, interest rate situation in developed countries like US and Europe. If this situation escalates, then definitely that's going to add to the problem, not solve the problem. And in that kind of a scenario, I think discretionary spend will be pulled back. People would want to switch over to alternative products rather than go in for whatever they used to consume earlier. And there will be rationalization that will take place, Shweta. So, and in case if this war has to escalate and neighboring countries do get in the Arab League or the Arab world, then definitely that will have its own repercussions on the global economies, including India.
Now, Gaurang, in light of all the concerns that we have been talking about since morning, crude prices being elevated for longer, interest rates staying high, and returns also moderating, demand not coming from Western countries as well as China. So do you expect the returns to also stay muted going forward, at least from in a month's perspective down the line for Nifty?
See, honestly, I don't look at short to medium term. But if the situation is what it is, and if it has to escalate, then you definitely have to scale down your expectation as far as returns are concerned. And more so, unfortunately, when things were looking a little bit more on the positive side, for the last 10 days, we have this situation between Israel and Hamas. We've heard about certain news items wherein Syria and Iran is possibly, sending out warnings to Israel, making repeated requests to the UN to tell Israel to scale down the escalated situation that they are into. Unfortunately, Suyash, again, geopolitical situation like this, it's very difficult to have any kind of assumption or any kind of forward-looking statements. Is very difficult to make. Like I've been mentioning, I think we'll have to possibly react to it as and when the news flows come to us.
Okay. Would it then be fair to say that it's very difficult to make an assumption about how markets will perform in the near to long run? I mean, all the assumptions that we had prior to the war are sort of, tossed out of window at this point.
And also, what should be the path for retail investors going forward, in the face of such uncertainty?
Well, Suyash, I think these are great times to invest. If you're not bothered about what's happening for the next 3 to 6 months, and this is not the first time that we have this kind of a situation, especially with the geography which we are talking about, the Gaza Strip, Hamas, Palestine, Lebanon. We've had situation in the past wherein Iraq invaded Kuwait, and as a counter retaliation, we had US attacking Iraq. We've had situation in Yemen, Syria. We have had the situation for a prolonged period of time. So I mean, it's not the first time, but like I mentioned, you can't possibly preempt for next 3 to 6 months. But if you're a long-term investor, corrections like this are great opportunities. And why go far beyond? I think what we faced about 2.5, 3 years back in form of the pandemic, thanks to the gift that we got from China, Wuhan virus, we have recovered quite well within a short period of time. So if you're not looking at short to medium term, long term, I think these are the times wherein you can bring out your shopping list and possibly nibble into some of the stock ideas from a long-term point of view.
All right, let's get those stock ideas. Let's first quickly run through how banking pack is performing.
Yes,
it's under pressure.
The banking pack was under pressure last week. In fact, even today it opened lower. Now we'll have the numbers trickling in from a number of banks, Federal Bank, HDFC Bank and Bank of Maharashtra. So first of all, for the whole basket, how do you expect the numbers to be in this quarter? And what sort of impact can we expect on the Nifty banking pack?
So overall, I think banking and NBFCs both. Let me put in all the three verticals of financials. That is private sector banks, public PSU banks, and of course strong NBFCs. And if you even go by the verbatim of the commentary as far as the second quarter advances, deposits, and CASA numbers are concerned, I think the management is quite positive about it. The other fact that gives me a kind of a comfort is the kind of fundraising that some of the banks and NBFCs are doing. Almost 8,500 to 10,000 crores was fundraising done by Bajaj Finance. Gives you a kind of a view that the management is quite optimistic about the credit demand and loan book growth. The last financial also, as a brokerage house, we were extremely positive on the banking and finance. This year also, we remain equally optimistic about banking and finance. And I'll say one simple thing, Suyash, that if India has to become the next $1 trillion economy, a great part of contribution and positive contribution would come in from the banking and NBFCs. And credit demand is going to be extremely, extremely strong. At the same time, over a long period of time, I think we've seen considerable downward move as far as GNPAs are concerned, gross and net NPAs, and provisionings are coming down. Interest rates for the 5th time, RBI has taken a pause. Let's hope that's going to be there for a pretty long period of time.
All right, and so therefore one of the results that we're expecting, a banking major, HDFC Bank. Let's go through what is the expectation. What are markets looking at?
So yes, Shweta, India's largest private sector bank will report its Q2 earnings today. It is expected to come after the market hours, so perhaps the market will only get to react to it from tomorrow. But this morning also the stock is down about 0.5%. Now, talking about the results are expected to be muted in this quarter, given that this will be the first quarter where earnings announcement will also include the results of HDFC Bank. So I have not taken profitability figures because on a year-on-year basis they are not comparable. But in last month's analyst meet, HDFC Bank's management said that return ratios will be affected for the next couple of quarters because of higher provisioning and interest coming under pressure. So if you look at the numbers of HDFC Bank, the provisions are expected to increase to about 30,000, which will have an impact on the gross non-performing asset as well as net non-performing assets. So gross non-performing assets in this quarter are expected to be at about 1.4% compared to 1.2%. So this will be a 20 basis point year-on-year rise, whereas net non-performing assets will be at 1.3% versus 1.1% in the year-ago quarter, given also a 20% BPS rise. Now, net interest margins will also are expected to come under pressure. They are expected to decline from 4.1% in Q2 FY23 to 3.5%, which is about a 60 BPS decline on a year-on-year basis. Return or assets are also is expected to take a 40 BPS hit from 2% in the year-ago quarter to 1.6% this quarter, last quarter, sorry.
All right, that of course is HDFC Bank. Gaurang, what are your big expectations? What numbers will you be keenly eyeing?
Well, I think there could be a little bit of squeeze on the NIMs. Asset quality is definitely going to give you a positive kind of number. Not to forget, we've seen a merger of HDFC Limited into HDFC Bank. Merger to play out at ground level may take a little bit of time. And I remember very well, Shweta, when the merger was taking place, all of us were extremely upbeat about it. We still remain upbeat about the merger. It only takes a little bit of time to play out as far as the earnings and adjustments are concerned. So not extremely concerned about this quarter, slight disappointment, if you will, on the NIMs front, on the margins front. But long term, we remain positive on HDFC Bank. And I think if my memory serves me right, Shweta, targets are somewhere beyond 1,900 on HDFC Bank.
Right. But Gaurang, you're obviously optimistic about the long-term prospects of the bank. But given that the results are today and the expectation is that, return ratios are going to get impacted, do you expect some sort of a correction in the stock prices? In the last 1 month, we have seen the stock fall about 6% or so. But in the last 5 days or 5-6 sessions, the stock has consolidated at about, 1,530 sort of levels. But do you see some bit of correction after the results?
Well, I don't think there's going to be a long life for HDFC Bank share price sub 1,500, to be very honest. I hope I'm right on that. Since the numbers are today, don't want to jump the gun, Suyash. But if you do get an opportunity, and stocks like HDFC Bank, you have to look at the historical track record. Even when HDFC Limited was there, HDFC Bank, these have been great wealth creators in individual portfolios, and I don't think you can write them out just because you get disappointment for 1 or 2 quarters. You have to look at the broader picture.
All right, looking at the broader picture, what other stocks are we tracking? So
Tata Motors is also in focus today. If you remember, Shweta, on Friday the stock touched a record high of about 666 levels, giving a 5% rise. This was on the back of reports that government is planning to boost the local manufacturing of electric vehicles. In fact, over the weekend we had a news that Tata Motors is looking to sell about a 9.9% stake in the in Tata Technologies, which is due to come out with its IPO in the next few months or so, to TGP Enterprises. Now, TGP will pick up this stake at an enterprise value of about 16,300 crore rupees. And in fact, if you look at the stock today, Shweta, it's up about 0.5% this morning, and in the last 6 months the stock has rallied about 42%. So Gaurang, like, given that we have seen a good bit of run up in the stock prices and that it is at its record high levels, do you expect some more upside in the stock, or probably we should expect some profit booking at this point in time?
Any stock, as a matter of fact, Suyash, does correct after a rally of a certain percentage. And we clearly remember, Suyash, that Tata Motor was once upon a time an untouchable stock. Nobody wanted to touch it. At 250, 300, it languished over there for a pretty long period of time. We stood with the stock at that point of time. We are standing with the stock even at current levels. 740 or thereabouts is the target based on whatever earnings we've seen so far. The management has also spoken about reducing the debt or making it debt-free over a period of time. New launches have found tremendous amount of traction as far as consumers are concerned. And there still remains a wait list period depending upon which segment and what model you want to go out and buy. And in the compact SUV EV segment, Tata Motors has been an undisputed king based on the model of Nexon. And of course, GLR business is doing well, contributing much better. So we remain positive on the stock.
All right. And before we let you go, Adani Enterprises is also in the news. A host of news, in fact, coming in after OCCRP report, another fresh report that came in by the way of Financial Times. And now we know Ministry of Corporate Affairs has also started investigation into Adani Ports. What are we picking up, Suyash?
So the latest development is, of course, the investigation launched by the Ministry of Corporate Affairs into the two Adani airports in Mumbai, which is Mumbai International Airport and Navi Mumbai International Airport. And we are seeing a good bit of impact also. I mean, the stock was down about 0.5% this morning. Some bit of a recovery on the back that the stock has already corrected because of the slew of negative reports that the group has faced in the past week or so. And I think it's down about 0.22% at currently.
All right. Adani Enterprises, Adani Ports, strong management commentary coming in there, Gaurang, over the past weekend from Adani Group, where Karan Adani also came on record, reaffirming faith to investors, stating we'll be repaying debt and we'll be repaying it sooner rather than later. What are you making of, future of Adani Group of companies? It remains strong, but as far as stock performance is concerned, very volatile over last 1 week. Obviously on the back of news items that are coming in.
I'm sorry to disappoint you, Shweta. We don't cover any of the Adani Group companies.
Okay. All right. Okay. Fair enough. We'll leave it at that. But Delta Corp, another stock that took a beating.
Yes.
There is a shortfall in revenue, GST collection, and notices have been pouring in.
Yes. So Delta Corp has gotten another GST notice of about 6,384 crore rupees. Now, the total amount of shortfall, the tax shortfall, is about 23,000 crore. And remember, the market capitalization of Delta Corp sits at around 3,700 crore. So 5 times the entire market capitalization, it has received the tax notices. And we are seeing a fair bit of an impact on the stock also. It's down about 8% this morning. So not a good news for Delta Corp shareholders.
Delta Corp, and Avenue Supermarkets as well, down by about 2.68% after the company missed its revenue targets.
Revenue targets, revenue was actually ahead of street estimates, but profit and margins came under pressure, and that's why we are seeing some correction. And the stock has also not performed in the past month or so. It has been hovering around the 3,800 mark, has faced resistance at the 4,000 mark. So we are seeing a correction on the back of disappointing earnings for the company as well.
All right. I think we'll leave it at that. Gaurang, thank you very much, sir, for taking time out. Thank you for joining us here this morning. All right, shifting focus to a story that we're tracking by the way of who is going to buy Disney Hotstar. That, of course, is the big story. My colleague Karthik Malhotra joining us here in the studio. Karthik, slew of bids that have been pouring in, but we now know Sony could be eyeing Disney India and making a bid for it sooner.
So very interesting times we live in, Shweta, simply because what is happening in the streaming wars, what is happening in the entertainment business and the sports streaming business is nothing short of an OTT drama itself.
Okay.
So, where did it all start? It started at a time pre-2020 when Disney Plus, Hotstar used to serve free content ad supported. And then when Netflix started pouring into India and Amazon Prime and there was competition heating up, it pivoted, like everybody else, to the subscription-driven model. And now the subscription-driven model really gained momentum when Disney Plus Hotstar actually had cricketing rights and all of those, from IPL to BCCI to ICC World Cup, etc. All digital streaming rights were with Disney Plus Hotstar. Now enters Jio Cinema, enters Viacom 18, the big pockets, deep pockets of Reliance Industries, and the IPL rights were taken away. And IPL streamed for free on the Viacom 18 supported Jio Cinema platform this year. And what did we see as a result of that? We saw all of the subscriber base of Disney Plus Hotstar migrating pretty much lock, stock, barrel to Jio Cinema. It was in any case a troubled business. ARPUs were low. And even when there was this race of subscription wars happening across the OTT stack, Disney Plus Hotstar lost most of its subscribers. Now, it obviously has been finding trouble and wants to exit the India business. The India business has been up for sale for a while, 6 months or so now. But there wasn't any talks up until now of Japan's Sony Pictures Entertainment coming in. There were news items of Ambani, Reliance Group, Viacom 18 picking up stake. There were talks of the Adani Group, which had recently acquired NDTV, to pick up stake. In fact, last week there were also news items reporting that Sun TV network might pick up stake in Disney Plus. And now the latest sort of suitor in this whole business is Sony. And Sony in itself, for the last 2 years or so, has been in talks with Zee Entertainment to pick up shares of Zee and in fact do a merger with Zee, because Zee has of course always been struggling to keep its entertainment business afloat, and that ran into legal troubles.
So what happens to the Zee-Sony merger?
So from what it seems right now, Sony is looking at Disney Plus as plan B. Plan A continues to be Zee Entertainment, and Zee Entertainment merger also was greenlit by NCLT last year. But this year, SEBI has put a sort of moratorium on Puneet Goenka, suggesting that Puneet Goenka, who's a promoter of Zee Entertainment, cannot take any board seats on any publicly listed companies, which includes Zee Entertainment. And now Zee Entertainment merging with Sony, Puneet Goenka, who had signed the deal with Sony, suggesting that he's going to stay put at the helm of affairs for 5 years, is now there's a big question mark on it by SEBI. Now, Puneet Goenka has contested SEBI's order at SAT, the Securities Appellate Tribunal, but Sony seems to be now looking at Disney as a plan B, that it definitely wants to become bigger in India. It wants to cash in on the losses that Disney has made and hopefully pick up the stake cheap. And at the same time, it is also looking with tenterhooks at what is going to happen from the SAT ruling on Puneet Goenka, and whether it would eventually go with Zee Entertainment or now talks emerging with Disney is yet to be seen. But Sony is definitely going to expand its footprint in India. Disney is definitely up for sale, and what Disney has done this time around is that this, I believe, this was the time when Disney should have revived its subscription base. But Disney instead followed the Jio Cinema route and is offering the Cricket World Cup for free, which is ad supported. So it is going to fight this last battle of cricket streaming. In fact, on Saturday, the India-Pakistan match was viewed by 3.5 crore people. That's the highest any sporting event or any entertainment, live entertainment has seen, ever since OTT streaming really began. So 3.5 crore people have concurrently watched the India-Pakistan match on Saturday. Now imagine if the subscription model was still on and this was not ad supported and free for the viewers, how many more subscribers and how much more money Disney could have made, which I believe is an opportunity it has lost. But one person's loss is another person's gain. So it seems this loss is going to make its valuation perhaps even lower, and it might be in better interest of Sony to pick up stake in Disney.
All right, but can we say for a fact that Sony is not so sure about Zee merger at this point?
I think it is fairly obvious. Otherwise, why would it try and bid for or initiate conversations with Disney Plus? You know, Sony is definitely not going to buy both. Sony is definitely not going to buy Zee Entertainment as well as Disney Star. And Disney Star is a huge business. In fact, when Walt Disney was buying Disney Star from Rupert Murdoch's business company, there was a valuation of about $79 billion, which was pegged on this entire conglomerate of Star. And then it became Disney Star. The India business even then was valued at about $17 billion. Now, it seems that it is going to be a fraction of that 17 billion, you know, at least half of that 17 billion as valuation now. But for Sony to bid for both Disney as well as Zee is going to be an overkill. So while it has one eye focused on what is happening at SAT with respect to the Zee-Sony merger, I think it is safeguarding itself by keeping one more lucrative bird in the bush here.
All right, one more lucrative deal that Sony is eyeing by the way of Disney Hotstar. We'll track all those details here on Newsline. But another story we continue to track by the way of EdTech major BYJU'S. BYJU'S looks like finally has some relief in form of 300 crore rupees that Ranjan Pai could be pushing in very soon.
I'm not sure if it's a relief or it's an added liability, because this 300 crore rupees is not being invested but is actually being lent to BYJU'S. And why is it? And to the owner company, which is Think and Learn.
To repay debt.
It is debt to repay debt. So another 300 crore rupees in debt to shore up enough financial muscle to repay Davidson Kempner, who had lent 800 crore rupees earlier this year to BYJU'S. And David Kempner had actually vowed to put in about 2,500 to 3,000 crore rupees. But that is when all news started, you know, going south in the case of BYJU'S. And it sort of made its stop loss, so to speak, at 800 crore rupees. Now, this 800 crore rupees has to be repaid. 300 crore comes in from Ranjan Pai, perhaps, you know, some other options available within the company to at least get one investor or one lender off its back and close one chapter and move on to another. Now, what this 300 crore rupees when it comes in will also do is possibly, you know, give the Chaudhary family that runs Akash tuition institutes, which was acquired by BYJU'S for almost $1 billion, 950 million or so. It gives that share swap which has always been pending, because the promoters of Akash did not go in for a share swap with BYJU'S parent company Think and Learn, because news emerging from BYJU'S was always negative. So it held on to its Akash shares and has not really swapped it. If this share swap now happens, then BYJU'S is going to own 51% of Akash. And eventually, whenever the listing, if at all the listing of Akash were to happen, then that is one profitable business that BYJU'S still has, and it could reap in some dividends of that listing. But as of now, this 300 crore rupees coming in, A, to enable the share swap, giving some confidence to the Chaudhary family to swap its Akash shares with Think and Learn, and then use that cash inflow to repay the 800 crore rupees which it owes to Davidson Kempner in the US.
All right, so there's a lot of debt there on BYJU'S
But what is still pending is the $1.2 billion. This
The
800 crore rupees is the term B loan of $1.2 billion. It's outside of this 800 crore, which was a short-term loan given to BYJU'S. There is an interest also that has accrued on this loan, and the books of BYJU'S are still not out there.
Still not audited?
Absolutely.
Results
so
still not out?
FY22, FY23 and half of FY24, we haven't seen any financials of BYJU'S still.
All right, but there is an attempt made, however, to restructure, to let go of people, to ensure that whatever remains has to be profitable business. So layoffs continue unabated. There is news that there'll be 7,000 to 8,000 more employees that could be laid off.
So I think, you know, BYJU'S does not have a choice really, because what has also happened is that not just BYJU'S, EdTech as a concept has not really, you know, sustained the momentum that we saw in COVID and immediate post-COVID era. So distance learning, online tuitions, online coaching, all of that in any case has slowed down in its ability to induct more students and charge them. So cash flow is definitely a problem. And in the interim, BYJU'S went ahead and made some great acquisitions, which are not, giving the kind of dividend that it had hoped they would. And as a result of which, even those platforms like Epic and, a couple of others, Great Learning, are up for sale. That sale is going to help pay back the $1.2 billion of Term B loan, apparently. But the point is, what happened in 2022? What happened in 2023? Where are those books? Where are those financials? It was supposed to be submitted. The audited FY22 books were to be submitted by the 30th of September.
That hasn't
we are 15
happened.
days beyond that. That hasn't happened. FY23 books were to be submitted by the 31st of December. We are 2.5 months away from that. FY22 still not clear. So we don't know what really went into those books, what got cooked, what got overheated, what got missed. And as a result, we really don't know what has happened in those last 2 years when the books were not audited. And hence, the troubles and the layoffs and the downsizing and shutting down of offices, all of that is obviously collateral damage for a company that grew too fast without really looking at unit economics.
All right. Getting too fast to the sun and burning itself in the process is what BYJU'S has done. But moving on to a troubled airline in India, that is Go First. Does it look like Go First is coming back?
A lot of bad news this morning, isn't it?
No, it's a variety of news, but let's talk about Pratt & Whitney. Pratt & Whitney saying that once Go First comes back to skies or takes back to skies, we will start servicing airplanes. We will start helping it.
So I think the arbitration, which is done by the International Court in Singapore, SIAC, I think had given its ruling that starting 1st of August every month, Pratt & Whitney, the engine maker due to which Go First actually got grounded. What happened was in 2020 onwards, Go First kept complaining of engines which were not serviceable. And those unserviceable engines cost Go First 50% of its fleet, which was unable to fly. And those losses from operations kept mounting with the reduced number of flights being taken to the sky and hence fewer passengers flying, fewer passengers paying for the air ticket. It actually boiled down on the 2nd of May when, attributing it solely to the faulty Pratt & Whitney engines and new engines not being received by Go First filed for voluntary insolvency in NCLT, and it was subsequently admitted. Now, multiple rulings there, but the one which is relevant is the arbitrator in Singapore telling Pratt & Whitney in unambiguous words that every month starting 1st of August, give 5 serviceable engines back to Go First, for Go First to deploy them back in its aircraft and be in a better position to take to the skies. Now, it's been almost 2.5 months since that, and Pratt & Whitney has not given one single serviceable engine back to Go First. Now it has gone and told the court in Singapore that it will be able to honor this directive only once Go First is able to resume its operations. Now it's a chicken and egg situation. Go First is saying it needs serviceable aircraft to be able to fly. It also has a suitor now in Naveen Jindal, Jindal Power, hoping to buy stake in Go First and perhaps acquire it at some point. NCLT, NCLAT, multiple sort of rulings there. There's a resolution professional who needs to see this deal through one way or another. And at that time, to the basic tenet of keeping an airline afloat is having the engines and the aircraft to fly them. And Pratt & Whitney, which owes as many as apparently 70 engines to Go First, which has yet been unable to take back any of its existing engines because of the moratorium imposed by NCLAT, is now saying that I'm not going to give you any engines until you tell me you're ready to fly again. And Go First saying, how the hell do I fly if I don't have the engines? So I think it's a chicken and egg situation, but it doesn't seem anywhere near fruition. It's very unlikely that any sort of a resolution in favor of Go First taking to the skies anytime soon. And this is festive season, this is holiday season, so this period is definitely lost for an airline that commanded as much as 9% odd market share in India.
So what happens to Jindal Power's bid at this point? Do you think the latest sort of commentary that's coming in from Pratt & Whitney, it's not a ruling because they're not complying by the SIAC ruling, will that hurt Jindal Power's prospects?
I don't think so. If anything, I think Jindal Power would get a better sort of valuation, a better deal, because there is no way that Go First can fly without the engines, and the engines are not coming until there is somebody who's willing to infuse that capital into the airline to let it sustain its interim losses until the moratorium is there, and thereafter once once the resolution is through and there is some sort of a merger or an acquisition, then infuse that immediate capital to get whatever is required to fly the airline. So if anything, I think for Jindal's power right now, it seems like it's not going to be a bummer. If anything, it'll just keep the expectation from Go First a little lower.
All right, let's move on. Another story we're tracking by the way of TCS. TCS seemed to have sacked some of its employees, and these employees were literally involved, and it was proven enough after a prolonged investigation that 19 employees of TCS were involved in bribe-for-jobs scandal. They have now been suspended, thrown out of the company.
Absolutely, including the head of the
human resources?
not human resources, the resource management group, the RMG.
So that would be different from human resources.
Yeah, it's partly different. So ES Chakravarti, the gentleman who has now finally been sacked, he was sent on leave once the scandal had broken out about 6 months back, and it got covered in papers, and in fact we had also had a discussion about 3 months ago or so where ES Chakravarti was the person named, and he was the head of the resource management group, which is an HR function, but this is not technically the HR head in the company. It's basically
it's a vendor basically.
No, it's a body, or it's a group which assigns resources to projects. So from within the pool of TCS, which would be the formal HR, the formal employee headcount of TCS, as well as any resources required from outside, which are sourced through vendors to serve the need of an immediate project which has to kick off. So this resource management group staffs a particular project, does not necessarily staff the organization.
Right.
So there's a new project, that project requires X number of people, X minus whatever number, X minus Y would come internally, and that Y would be sourced from vendors. And now there were 6 of these vendors which were supplying this Y component to staff projects, which were also involved in this jobs for bribe-for-jobs scandal, wherein now ES Chakravarti himself has been sacked along with 16 other people. Out of a total of 19, a total of 16 have now been sacked, and 6 vendors have also been blacklisted, stroke sacked, who will not be doing business with TCS anymore. I think comes at an opportune time. In any case, we've seen IT companies are struggling with headcount issues. Not that the 16 number is going to make any impact, so to speak, but then at least being sure that your processes to staff projects are absolutely watertight. You're not compromising on corporate governance. You're not compromising with the ethics and the brand ethos of a company
TCS.
which carries the Tata name on it, for which incidentally TCS also pays royalty, but that's a different story altogether. But the fact is, you don't want to compromise on your ethics. You don't want to compromise on corporate governance, and you've taken the sizable action here that you've accepted that there was a problem. That problem has partly been fixed, and those perpetrators who were responsible for the problem have been given the pink slip and shown the door.
All right, problem fixed, rectified, and people responsible have now been sacked. That's as far as TCS is concerned. But a story that we continue to track for the course of last 2 months now, and that is whether import of IT hardware like laptop, whether there is a restriction, whether there is going to be some sort of import license that you need it, you don't need it, there's a pushback, 1 month, 2 month, what is as as good as anybody else's. So I think, I suspect there are 2 possible scenarios right now. Scenario number 1, the government never intended to put a license. And that is what the Commerce Secretary is saying now, that, maybe it's shy of being compared with the pre-1991 pre-liberalization license Raj, and is now soft wording it. But let's give the government a benefit of doubt and maybe assume that a license was actually never required. What was perhaps required was that you just inform the government, fill up a form through a portal, and seek their permission that I want to import, so-and-so brand of such and such laptops from this country or that country. The government said, I just need to be in the know of where are you importing your laptops from. And how much are you importing? So this is one side. The other side is that obviously the government wanted to restrict it. The government wanted to only get Indian companies to go with trusted partners and sort of, arm twist international brands to make in India rather than import from India and import from the world and sell in India. And which is why so many PLI applications, almost 40 PLI applications filed, and the government was supposed to announce in the first week of October which are the companies which are going to be eligible to seek that PLI benefit or avail that PLI benefit. And now, so maybe the government said that we need to restrict it, we need to add a license, and now it's realizing that is likely to bounce back, and we may be compared to pre-1991 pre-liberalization license Raj.
and hence it has withdrawn it. So either of the two. Either there was, I mean, what the Commerce Secretary is saying now, that there was never a license, there was never any restriction. Just tell us where are you importing from, fill up a form and we will say go ahead and import. Or it did want to import, it did want to put a license, Raj, it did want to put restrictions and is now taking very, very gradual steps back. First by way of extending the deadline and now saying, hey, you know, it was never there.
So it comes up with a restriction, let's not call it license if that's not what the government wants, but it comes up with some sort of restriction saying you have to inform the government if you're importing from other countries outside of India. Then it says, okay, fine, we'll give you 1 more month, so we shift the deadline to 31st
Parallelly,
of
we open
October.
PLI, that make in India, make in India, make in India, we will support you to
and
make
this
in
at
India.
a time when entire community of people who manufacture laptops are constantly ringing, knocking the doors of the government saying, what is this? Explain this to us, this to us. We don't understand it. Is it a license? Is it a restriction? Can we not import? You have the American government in India coming to attend G20 stating that we don't like this sort of a restriction. It will hurt American companies here in India. You get 38 applications for PLI. Suddenly you're saying there is no more license, Raj. It's as confusing as it gets for everybody out here. But my guess is that perhaps after a lot of backlash, government finally has decided to rethink an import license.
That's what it seems like, Shweta, but let's give the government a benefit of doubt and say, go with what the Commerce Secretary is saying, suggesting that there was no license, Raj, there were no restrictions. Just inform us. Just inform us. We just need to know.
So just to inform you, Karthik, we've run out of time on this show. Thank you very much for watching.